Is tomorrow going to be an inflection point? If so, how?
I don't think it's necessarily going to be an inflection point, particularly not for the tech sector. I think that the key issue, and it's going to be resolved in short order, regardless of who wins the presidential election tomorrow, is the final passage by Congress of the fiscal stimulus. That's what I'm looking for before I get too excited about going back into particularly my tech stocks.
So then, do you have a similar market outlook, whether it's Biden or Trump in the White House?
I actually think that there's not going to be that big of a difference. I know that sounds a bit weird, but if you take a look over time, regardless of who's in the White House, a Democrat or Republican, if they have control of both houses of Congress or not, I've looked at all the different combinations, there's not that much of a difference. And I do think coming out of this, that both parties are going to be pretty aggressive with this fiscal stimulus, a package to the tune of about $2 trillion. And as long as we do not have to shut down the USA again, and we don't have a repeat of the business closures from March and April, regardless of who wins the election, I think we're going to be in a pretty good position for a bull market in stocks as the smoke clears.
So when it comes to tech, talk to us about what you're buying and not buying, because other investors are looking at tech and saying it's a bubble.
Yeah, I was around in the late 90s. At that time, I ran some very big tech-only portfolios for Merrill Lynch, and so I saw and experienced that. And I don't think that this is a bubble, at least not of the same magnitude. Today, the tech valuations are not as stretched. Today, the publicly traded companies, even if they're emerging companies, are much more real. Back then, you had a lot of crap that was being foisted upon investors by investment bankers. And I could tell in an instance when they came through our offices on IPO roadshows that these companies were not real. We don't have that today. These days, it's much more difficult to have a company that is still needing to be baked to come through the IPO pipeline. And so with interest rates so low, and with the growth forecast so low, and with inflation so low, I cannot see tech stocks not outperforming in the future, again, after we get through the election crush and all the uncertainty around that, because growth should outperform value in that scenario. And the tech company should do well, because again, this is not a perfect parallel or not as worrisome as what we had leading into the popping of the internet bubble in the early 2000s.
Paul, we have a question coming in from a viewer on the terminal asking, what do you see as an appropriate hedge for tech and mega cap stocks?
Yeah, what I try to do with my portfolios that I manage for folks, right, where I actually have an option to be tech or non-tech, is I think all U.S. equity investors, once the smoke clears, should get back to neutral weight in the sector, which is about 40% of an equity portfolio. However, on the 60% side, I do have companies that are non-tech. I don't buy them unless they yield at least 2%, which exceeds that of the S&P 500. And then you have a nice ballast on the ship. So you have some volatile tech names because you still want to be in those leadership companies. That's 40% of your portfolio. And then you hedge with 60% of yielders above 2% of companies that still have price appreciation potential, but are much more solid, much less volatile.
So when you look ahead, what do you think are the biggest risks and the biggest threat to tech stocks? Obviously, we're dealing with regulation. I mean, when it comes to the election itself, huge test for companies like Facebook and even Google.
Yeah, so I think it's a couple of things. One of the things you're seeing playing out right now, and that's why I'm cautious about committing too much to the sector. You have companies like PayPal announce results tonight, a perfect example, a nice microcosm. The stock closed today at $188 a share. It's had a huge run in 2020. It's a COVID beneficiary. And they actually posted good numbers tonight. Tomorrow, Wall Street will raise those numbers for the rest of the year, but the stock will be down 5% tomorrow. And then it has to drop another 5% before I get reinterested. So the biggest risk is, as your reporter said in the lead, too far too fast with the stocks. Nothing fundamental, but just too far too fast. Then, of course, there's the madness, which is what happens if we don't have a election result tomorrow, and this lingers for days, if not weeks, if not months, and then that pushes back my key catalyst, which is the congressional passage of the fiscal stimulus. Once we get through that, I'm feeling very good about growth over value and stocks over fixed income. Again, with the low interest rate, low inflation, low growth environment, there is probably no other asset class in which you have to be exposed to in that kind of background.